Joining us now, former Tesla board member and founder of the Wesley Group, Steve Wesley. Steve, investors got a little excited for a moment about that profitability target, some of that chatter, that language. But long term, is that the right thing to focus on?
I don't think so. Look, General Motors beat Wall Street expectations, but it's a low bar here. ICE vehicle sales for GM down 2%. So GM desperately needs a comeback story. And the problem is GM is lagging on EVs and autonomous vehicles, which are the future. Tesla's going to sell, just by comparison, 1.8 million EVs this year. GM's going to struggle to do 110,000 EVs in 2024. So they've got some work to do here. And GM's been in the EV market for 8 years. They ought to be selling bigger numbers. Smaller brands like Hyundai, Kia, and others were due twice the number of EVs each that GM has done. So GM's got to recommit to EVs, and they've got to recharge the Cruise autonomous vehicle effort. If they can do that, they might be able to be poised for a comeback.
But EV demand right now is less than expected. Is that a good thing for those who don't have the EVs and the profitability to really satisfy higher demand? Or do you think it's going to end up causing some of those laggards to take their eye off the ball and be behind in the future?
Look, here are the facts. A lot of people out there saying, oh, EV sales are slowing down. Nonsense. There are going to be 17 million EV and hybrid vehicles sold globally. That's 20% of all cars sold on the planet. What's really changed here is the rise of China, the #1 auto market in the world, bigger than all of Europe put together or North America. 7 of the 10 top EV brands are Chinese. Battery prices are going down every year. EV sales are going up along with hybrids. And 2025 is maybe the first year that this green premium, where you had to pay extra for an EV, is gone. For the rest of our lives, you're going to be paying less for an EV, and that's for the simple reason that the cost of batteries goes down every year, about 40% between 2023 and 2030. Here's one other thing, just file away. BYD, the Chinese automaker, is selling the Seagull for $10,000. How many internal combustion engine cars have you seen for 10K? So even if U.S. policymakers slap 100% tariff on that, well, gee whiz, they'll sell it for $20,000. That's a big market. Western automakers need to get ready for the all-electric future.
So I get that. And even with that tariff, as you mentioned, I mean, that's an eye-popping sum in terms of how inexpensive it is, which raises the question, OK, maybe EV adoption is here and it's sweeping across the world. But it also means, given how subsidized that Chinese EV market is, that the leadership for this next chapter could very well look very different.
Well, it's exactly right. Look, I want Mary Barra and the good folks at Ford to be successful. They've got to get the memo on EVs. Battery prices going down. Consumers are looking for lower cost, more reliable, greener vehicles. That means they have to go electric. But the Chinese have a jump start on us. We need to kick it into a higher gear. And then right behind this, you got to move toward leadership in autonomous vehicles, because that's no longer science fiction. Those are a reality. You can just come to any of the 6 cities Waymo is already offering autonomous ride-hailing with no driver in the front seat.
OK, so if we shift from EVs to AVs, autonomous vehicles, we get this Tesla robotaxi event later this week. What does that mean in terms of this next chapter? Are investors too excited, or is there real potential here to see this robotaxi future roll out sooner rather than later? And is it a profitable one?
Look, EVs have been science fiction my whole life. Today, they are here now. Tesla's smart to be betting the farm on robotaxis, but I think their October 10th event may be a flop, and that's for the simple reason they're not quite there. You need regulatory approval for these things. Waymo already has it in 5 cities. They're adding more every month. San Francisco, Los Angeles, Phoenix, Austin, moving to DC. And for the simple reason, you can drive 17,000 miles in a Waymo without a critical event. Tesla, depending on which third party is reviewing it, is reporting between 14 miles and 190 miles. That just doesn't cut it. So Tesla's got to kick things into a higher gear. They need to get what's called L4, which is near autonomous approval in either the U.S., Europe, or China in the next 6 to 12 months. General Motors, by the way, got put in a penalty box with their Cruise offering, which looks to be pretty darn competitive. It was operating well. They had a bad accident. It looks like They're about to get regulatory approval in California. So I hope they can become a competitor in the space. But the big picture here is 1.4 billion use ride-hailing today. When you take out the driver and you reduce the cost of the vehicles, which you will, a lot of these will go to become Chinese electrics, not the fancy Jaguars that Waymar's using. Autonomous ride-hailing is going to be ubiquitous, and it's probably going to cost half as much with a safer driving experience. That future is coming a little faster than people think.